This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, July 24, 2026, and this is the New York session. Now, let's get into it. We are looking at a market defined by contradiction. Bitcoin is holding $64,113, but the fuel beneath it, futures demand, has evaporated to 2024 lows. Meanwhile, Iran's crypto outflows have spiked 700%, injecting raw, forced sell-side pressure into a system already stripped of liquidity. As of 19:04 ET on Friday, July 24, 2026, the Fear and Greed Index sits at 14, marking extreme fear, yet we are seeing a strange bifurcation where BNB and TRX are defying the broader -1.27% market cap contraction. Let's cut through the noise. Turning to the schedule, the immediate catalyst is the U.S. Senate Housing Bill vote expected July 25, 2026, which includes a CBDC ban provision. This is a structural regulatory event that reinforces Bitcoin's digital scarcity narrative while complicating stablecoin frameworks. Additionally, PayPay is releasing updated filings for its Nasdaq IPO, seeking up to $1.10 billion. As the majority owner of Binance Japan, this directly impacts the BNB ecosystem and broader exchange-listed derivatives liquidity.
And for that legislative vote, watch the reaction in Ethereum relative to Bitcoin. If the market interprets the CBDC ban as a sovereign endorsement of Bitcoin, we might see Ethereum lag as pure monetary property trades against regulated alternatives, or conversely, rally if traders view the ban as clearing the path for private sector innovation. It's a binary regulatory split.
Here is the snapshot. Total market cap is $2,273,903,413,048.23, with 24-hour volume at $64,903,234,095.45. Bitcoin is at $64,113, down 1.58%. Ethereum is at $1,858.26, down 1.25%. But look at the leaders. TRX is up 0.57%, and Uniswap is up 0.28%. Now look at the laggards. NEAR is down 4.1%, Cardano is down 2.96%, and Solana is down 2.93%. The spread between the resilient and the rotting is widening rapidly. Breaking the headlines, Cointelegraph reports Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. Simultaneously, CoinDesk notes that PayPay, 40% owner of Binance Japan, is seeking up to $1.10 billion in a Nasdaq IPO. And Cointelegraph highlights that TD Securities sees NYSE tokenization as an institutional turning point. That 700% spike in Iranian outflows is the primary driver of the current 14/100 fear and greed reading. We aren't seeing organic retail capitulation here. We are seeing forced liquidation from a specific geopolitical actor. The sentiment isn't just fearful. It is panicked by exogenous shock. The 7-day trend has moved from 12 to 14, which tells me the velocity of that panic is slowing, but the absolute level of despair remains maxed out.
I'd argue that viewing the 700% outflow as purely sentiment misses the flow mechanics. That is a massive, one-time supply injection that distorts the order book. It explains why we see such disjointed performance between assets like TRX and Solana. The outflow isn't changing how people feel. It's flooding specific liquidity pools with distressed inventory, forcing price discovery downward regardless of fundamental sentiment.
And let's not forget Core Scientific turned lower after disappointing Q4 results. You combine forced geopolitical liquidation with failing minor fundamentals, and you have a double whammy of selling pressure on the infrastructure side. The 14/100 fear score is justified by this convergence of exogenous shock and endogenous weakness.
Let's drill down into the assets. First, Bitcoin. It is sitting at $64,113, testing critical support with futures demand at 2024 lows. Grid, is this a valid technical floor?
It is a fragile floor. Bitcoin is trading at $64,113, with a 24-hour range of $63,713 to $65,700. The high beta breakdowns in Solana and NEAR suggest that risk-off sentiment is draining liquidity from the entire board. However, Ethereum is holding $1,858.26 against a broader market decline, showing relative strength. The issue is the bid side. With futures demand gone, there is no institutional leverage to catch the knife if $64,000 breaks. We are watching spot holders defend a level that lacks derivative backing.
What Grid sees as fragile, I see as a dominance shift. Bitcoin dominance is at 56.56%. Capital is actively exiting altcoin ecosystems, Solana down 2.93%, Cardano down 2.96%, and rotating into Bitcoin not as a growth play, but as a safe harbor. The flow data confirms this is a flight to quality trade, not a bullish conviction trade. The money isn't coming in, it's just hiding.
So the dynamic is clear. Bitcoin is holding up not because of strength, but because the alternatives are bleeding faster. Grid, you mentioned the lack of derivative backing. Does that mean we shouldn't expect a bounce even if the Iranian selling pauses?
Correct. Without open interest returning, any bounce off $64,113 will be shallow and likely to fail. We need to see volume surge to validate any upward move. Right now, the path of least resistance is sideways to down until that liquidity void fills.
Moving to Ethereum. It is down 1.25% at $1,858.26, outperforming Bitcoin's 1.58% decline. CIPHER, what is driving this relative resilience?
It's the tokenization narrative. TD Securities' commentary on the NYSE linking to tokenization provides a fundamental anchor for Ethereum that Bitcoin doesn't have in the current institutional eye. Furthermore, PayPay's IPO filing for Binance Japan adds regulatory legitimacy to the exchange ecosystem, which benefits Ethereum's decentralized finance and smart contract utility more than Bitcoin's store of value narrative. The flows are rotating from speculative layer 1 into regulatory adjacent infrastructure.
But be careful, CIPHER. You're citing institutional adoption as a buffer, but the data shows Bitcoin futures demand collapsing to 2024 lows. If institutions are exiting the Bitcoin futures market, they aren't necessarily rushing into Ethereum longs either. They are likely moving to cash or treasuries. The relative strength of Ethereum might just be less severe pain rather than actual accumulation.
Let's look at the laggards. Solana is down 2.93% at $73.89, and Cardano is down 2.96% at $0.16. These are high beta plays. Pulse, how is the community sentiment reacting to these drawdowns? The sentiment here is deeply toxic, but it's distinct from the broader market fear. With the fear and greed index at 14/100, the retail capitulation in Solana and Cardano communities is reaching fever pitch. However, the 7-day trend rising from 12 to 14 suggests the rate of new fear creation is slowing. The panic is mature. We are no longer seeing fresh waves of sell orders entering. We are seeing the exhaust of the existing wave. The 700% Iranian outflow shock hit these chains hard, but the localized panic appears to be stalling.
Technically, Solana's breakdown below recent consolidation ranges is confirmed. At $73.89, with a 24-hour low of $73.50, there is little support visible. NEAR crashed 4.1% to $1.81, which validates the sector-wide breakdown. These are not temporary dips. The chart structure has shifted from consolidation to distribution. Unless we see a volume-backed reclaim of the upper range, these levels are now resistance.
I agree with Grid on the breakdown, but I want to highlight Uniswap. Uniswap is up 0.28% at $3.77, while Solana is tanking. This proves that within the decentralized finance sector, the speculative tokens are dying, but the utility tokens are surviving. The flow is not leaving crypto, it is leaving beta. Investors are rotating out of Solana/Cardano and into Uniswap/TRX. The $64.9 billion volume is being redistributed, not destroyed.
BNB is holding strong at $564.36, down only 0.53%, supported by the PayPay IPO news. SPECTER, is this the defensive anchor everyone is talking about?
It is the only logical place for defensive capital right now. With the VIX at 16.64 in equities, traditional risk appetite looks calm, but crypto is decoupling into extreme stress. BNB is benefiting from the PayPay listing and Binance's market share, acting as a proxy for regulatory acceptance. However, I challenge the idea that this makes BNB safe. If the broader market cap contracts further due to geopolitical escalation, correlated assets like BNB will eventually succumb to gravity. It's a slower fall, but the direction is determined by the broader liquidity vacuum.
So, synthesizing the top tier, Bitcoin is a static hedge held together by dominance, Ethereum is supported by tokenization narratives, and BNB is riding regulatory proximity. Meanwhile, Solana, Cardano, and NEAR are suffering from a combination of technical breakdown and forced liquidation shocks.
Let's touch on Tron. TRX is up 0.57% at $0.33, bucking the trend. CIPHER, why is Tron acting as a yield haven?
Tron is the backbone of stablecoin transfers. In times of extreme fear and geopolitical uncertainty, users move capital into stablecoins and transfer them via TRX rather than burning gas on Ethereum or risking latency on Solana. The plus 0.57% gain is a direct reflection of this defensive flow. It's not speculation, it's utility. When counterparty risk rises, transactional efficiency wins. That is why TRX and Uniswap are green, while the rest of the board bleeds.
Finally, let's look at the outliers. Link is down 1.71% at $8.32, and Polkadot is down 1.38% at $0.80. These are legacy protocols losing ground to the newer, higher throughput chains or the dominant L1s. Grid, any technical hope here?
None. Chainlink at $8.32 is well below its 24-hour high of $8.55. The market is punishing projects that don't have immediate revenue or tokenization narratives. Polkadot at $0.80 is trailing significantly. In a risk-off environment with 14/100 fear, capital does not wait for parachain auctions or governance votes. It runs to speed and yield. These assets are being left behind.
To wrap this up, the picture is stark. We have a flight to safety regime. Grid technical analysis confirms that high-beta assets like Solana and Cardano have broken structure. CIPHER flow data shows capital retreating from speculation into stablecoin rails like TRX and defensive anchors like BNB. Pulse notes that the panic, while extreme at 14/100, is stabilizing in velocity, suggesting the worst of the exogenous shock may have passed, but the internal damage is done. My takeaway: reduce exposure to speculative layer ones. Maintain core exposure in Bitcoin and Ethereum only as hedges, not growth engines. Rotate residual capital into BNB or TRX to capitalize on the defensive rotation and the upcoming PayPay IPO catalyst. Treat the current market not as a trading opportunity, but as a stress test for portfolio resilience.
Key takeaways for your Friday close. Bitcoin is testing $64,113 with weakened futures support, while Ethereum shows relative strength at $1,858.26. High-beta assets like Solana and Cardano are leading the downside, while defensive plays like Tron and BNB are absorbing capital. Geopolitical shocks continue to drive volume, but sentiment appears to be nearing a local plateau. Keep your eyes on the U.S. Senate Housing Bill vote on July 25, 2026, and the PayPay IPO filings. That is where the narrative momentum will shift next week. This is ShadowQuant Crypto Edition. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.